This is Caterina Benitez with the Law Offices of Caterina M. Benitez. My website is www.benitezlawfirm.com. Phone number is area code 559-472-7337. Today we are going to talk about bankruptcy and particularly how taxes are affected when a person files bankruptcy. With tax season coming around, many people ask me whether someone can file bankruptcy if they still owe back taxes or if they haven't paid taxes in a number of years. Generally, the answer is no. In order to file bankruptcy, you have to have your tax returns up to date. That means all the taxes have to be filed for the years that you have missed. You cannot receive a bankruptcy discharge or bankruptcy relief under either chapter of bankruptcy without first getting up to date with your tax returns. Another question I'm asked is if a person has not filed their taxes in a few years, what happens, or whether or not a person can still file bankruptcy. And the answer is they have to first file, bring everything up to date, unless they owe back taxes. The back taxes may be an issue which may or may not be dischargeable, which I will discuss. Another question that clients generally ask me is whether or not they have to fully report all of their income. There are some clients who come in to my door who are paid in cash or not paid with a paycheck, and they want to know if they can still file bankruptcy if they are paid under the table. The short answer is yes. However, it is very important that clients keep track of all of their income, as all of your income does have to be fully disclosed. Any failure to report income can be considered fraud and can get you into some trouble if you're in the bankruptcy process. So make sure to keep all of your records complete, and that way any funds that are not accountable through a paper trail can be made up in a bankruptcy. Another question I get is whether or not a person can file taxes during their bankruptcy, and the question is yes, you can. In fact, you are actually required to do so by law under the Bankruptcy Code. However, there are bankruptcy exemptions that may be able to protect any tax refund you may be able to receive, and every client's case is different, so you would have to speak to my office, speak to me directly about whether or not you can discharge those tax returns. If a person gets a tax refund or a bonus from work or even an inheritance, another question that clients ask me is whether or not they can spend that money while they are in the bankruptcy process. The answer is no. You have to make sure to check with me to see what we can do with the money that you do receive. Many times, as with a tax return, these funds are exemptable, so we may be able to protect them from the bankruptcy trustee. This is especially important in a Chapter 7, which is a liquidation of assets and debts. Another question is whether or not a client can discharge their taxes in the bankruptcy process, and the answer is it really depends. The taxes can be discharged or forgiven in a Chapter 7 as long as they meet the following conditions. The first condition is what is known as the 3-year rule. Now, the tax return under the 3-year rule on which the tax debt arises must have been due at least 3 years from the date you file for bankruptcy. The second answer is what is known as a 2-year rule. The tax return has to have been filed at least 2 years prior to filing for bankruptcy. The third is the 240-day rule. The IRS or state tax authority in California, it's called the Franchise Tax Board. It states that it has not formally assessed your liability for taxes within the 240 days before you file bankruptcy. And also, it's very important that clients understand that they cannot have any fraudulent activity or have been reported by the IRS to have fraudulent activity on their taxes, otherwise their taxes and the rest of their debt may not be dischargeable.